Hi, this is PR Sundar. Welcome to Post Market Report, sponsored by Delta Exchange. What a fantastic fall today. Who would have expected Bank Nifty to fall nearly 1,200 points from intraday high to low? In fact, in the last 1 month, Bank Nifty has fallen nearly 2,000 points from intraday high to low on two trading sessions, and then two trading sessions it fell more than 1000 point. Today is that second trading session. In these four trading sessions alone, Bank Nifty has fallen 6000 points. And falling is not an issue, but what happened last time? Bank Nifty was trading above 48,000. Then from there it came to 44,500 something. Then again shot up to 47,000 plus. Now again falling, and today broke 45,000 on the downside. So this is the kind of volatility that we are going through for the last 10 trading sessions. A huge selling by FIIs today. I do not know what triggered them. There was nothing specific in the RBI policy, and mostly RBI policy is a non-event as far as our market is concerned. As expected, there was no rate hike or rate cut, and the comments were not really very hawkish. But in the morning, Bank Nifty went up. From the high, it kept on falling nearly 1,200 points from intraday high to low. And Nifty for the 10th trading session, hugely volatile, and minimum 200 and maximum 300 point move happens in Nifty. And today, no wonder it's a more than 300 point fall from intraday high. Those who bought the put option today, they were very, very lucky. And put options, say for example, 21,700 put option. Yesterday it closed around 11, 12 rupees, and today it went up to 2, 3 rupees. Then from 2, 3 rupees, it went up to 74, 75 rupees. And this is not really very bad, but Bank Nifty, although it's not a weekly expiry, Bank Nifty premiums also would have shot up like anything because of 1,200 point fall. Even 21,400 put option. Yesterday, it was trading around 5 rupees, and then closing it was trading around 3 rupees. And today, that 5 rupees taken out again today. So such is the ferocious fall today. I do not know. State Bank of India has shot up nearly 10% in last two trading session. Yesterday it was up 3.5%, and today 6.5% at the highest point. Of course, after that it corrected a little bit. So a few years before, I had one friend who invested all his money in private sector banks. And he was very proud that he never invested in a PSU banks. And now the way, like a few years before, if somebody told you in one particular month, State Bank of India will shoot up 10% and the HDFC Bank will fall 20%, you would not have believed. And that is the kind of, the difference between PSU banks and public sector banks. And today, Axis Bank, Kotak Bank, ICICI Bank all fell more than 3%, and HDFC Bank fell almost 3%. Anyway, HDFC Bank, it has been, I think as of now, it is down 20% from its all-time high. So HDFC Bank becoming the friend of bears. And if not for Reliance and TCS, market would have fallen even more. And in the first half of the session, the India VIX did not go up because the people thought, this is the event. As I said, this is the only event for the rest of the month. After this, there is nothing very important. So once the event is over, the market should stabilize. Right? It may fall, but after falling some, then it should stabilize. But that does not happen. Market continued to fall. Intraday recoveries are sold into, I thought at least after 130 there will be some stability, but that is when FIIs have accelerated their selling. And today there was no news, nothing. FIIs have sold about 4,900 crore plus. The domestic institutions have bought for 5,000 crores, but that did not really help. So probably FIIs would have sold heavily, and when Bank Nifty fell 1,200 point, probably the domestic institution would have entered. When all the private sector banks fall more than 3%, probably domestic institution might have entered. By that time, it was too late already. So this is the weekly series is over. There will be no significant build up, and markets are too volatile. In fact, January month 4 weeks and February month 2 weeks, 4 plus 2 6 weeks are over, and Nifty is still it's somewhere around the same place. So 21,700 plus is where the December expiry happened, and today also it is somewhere around 21,700 plus, like maybe 40-50 point less. So markets are consolidating with huge volatility. This volatility is what scares the traders, and it is not the market that is going up or down. If this is the volatility now, so what is going to be the volatility ahead of the parliament election? So that looks very, very a scary picture right now. And no, our markets are not used to this kind of move, 250, 300 point in Nifty almost on a day-to-day basis. So anyway, so let us see. Maybe FAs, as I always say, these FAs will always press the huge sell button only on an expiry day after selling call option and after buying put option, so that whatever huge selling bring down the prices, they may lose something, but that will be more compensated through the derivatives. So this is what some big people do. So that is why, on an expiry day, things go haywire like this. So let us see where we are going to start tomorrow. Right now, the European markets are slightly lower. US futures are also slightly lower, but there is nothing to worry. But our market, especially the banking stocks, and especially ICICI Bank and HDFC Bank, there is a reason to worry. So hope you enjoyed listening to this audio. Thank you for listening.